Hello, welcome. I'm Silvia Pavoni, economics editor of The Banker, and I am in Hong Kong for the Financial Times IFC Global Series. I'm here with Laura Cha, who is the chairman of the Financial Services Development Council for Hong Kong. Laura, you've just given the welcoming remarks here at the event. Obviously, we're talking about international financial centers and the role specifically that Hong Kong plays within this area. So how does Hong Kong fare, do you think, against the other financial centers here in Asia?
I think Hong Kong has always been a preeminent one, financial center. There are others, and we are fully respectful of others, their advantages, and there's competitions, and there's a question about it. We each have a different area of expertise and excellence. And for Hong Kong, I think our biggest strength is, of course, our being part of China, being at the doorstep of China, the gateway to China. And we have taken advantage of that in the last 20 years by listing Chinese enterprises on our exchange. And in the coming years, with the internationalization of renminbi, we have a special advantage at that as well. We are the first offshore renminbi center, and we will continue to build on that and increase our critical mass and increase the product that will be offered, and play into that is going to be our strength. And
we heard earlier talking about regulations, and we said obviously Hong Kong is a key, as always said, the key role within the region, within Asia as a financial center, and perhaps now even more so in the wider context, because regulation is pushing, we heard, a lot of investments away from traditional larger financial markets. So are you seeing actually an inflow in terms of investments coming to
Hong Kong? I think so far from what we understand from newcomers to this area, we attract international capital, not so much because our regulation is easier, but because we have a well-recognized regulatory system, which is certain, which is fair, which is transparent. So investors have the confidence. Whether, in the short term, maybe some money comes in because other areas, jurisdictions, may have more stringent regulation. But I think the world is tending to move towards a more harmonized, if there are regulatory requirements introduced in one area, pretty much it will be globally applied.
So you're hopeful that that the regulation will at some point be coordinated?
I certainly hope so. But right now it is not.
Right now
and it adds to the cost of doing business for all the financial banks, of all financial institutions, wherever they are placed. And we certainly want to attract people, not because we have lax regulation, but because we have, international standards that people have confidence in.
Cost of compliance, we've seen, is lower in Asia than in other jurisdictions. Do you expect this that kind of figure to go up in the future as regulation will have a bigger impact in Asia?
I think it will go up. It's a global phenomenon. I think in the more mature markets, the cost of compliance is going to go up even more, because you can see the regulators really pushing tighter and tighter. But having been a former regulator myself, I think it is important to keep a balance. If you regulate too much and you really, take banks for example, the capital requirement and so on are so tight that one find it difficult to lend to the smaller borrowers, because it increases your capital and the capital requirement, etc. And so it has an effect, direct impact on the real economy.
How many regulators do you think share your views?
I don't know. I think some regulators are now beginning to see that, because on the one hand, the government wants to stimulate the economy and encourage the institutions, banks in particular, to lend to the small, medium enterprises. And on the other hand, if you are coming down with extremely stringent regulations, know your client and so on, you're forcing the institution really to turn away from some business that may think that they think that's too risky and it's not worth taking the risk.
How close do you think we are to tipping points, to the point where too much regulation is actually hurting the market and meant to regulate?
I think About there, I think. Recently some of the major institutions have been fined heavily, and I'm not saying that misconduct should go unnoticed, but there should be a balance. So that people recognize that there is a price to pay for the breach of regulations and rules, but on the other hand, it is not so severe that it cripples the market. And then on the other side is that if the fine goes to compensate those who suffered loss is one thing. If it goes to another area of the go into the government treasury, which is in most cases it is, then the market is still not satisfied. So it doesn't solve the question completely.
Thank you for your comments.
Thank you.